We work in the space of software as a service and big data, serving principally the public sector market. So we have around 150 local authorities and also large government departments like Department of Work and Pensions and HMRC. And also we sell through big companies like Capita and IBM, helping those organisations. They're helping public sector save money, target fraud and error, and increase their income. I think one of the significant challenges is making sure that your business continues to operate while you're focusing your energies on the exit process. So we address that by having a clear division between the people working on the exit process and those continuing with the business. But equally, it's about understanding the mindset of your potential buyers. Like any sales process, you need to understand what it is they're looking to buy for and how you can present your offer to meet their needs. So it's about targeting the organisations who are likely purchasers of your company and then structuring and presenting your wares, both your financial results, but also your capabilities and your assets, your contracts, your customers, your markets and your products to meet the desires and the needs of those companies, and recognising that their decisions will not be purely financial decisions, that they will often be around them addressing gaps in their market or in their product line or improving their customer position. So it's about understanding the potential buyers and targeting your offer to meet the sort of things they will be looking for, and to some degree recognising the things that are in vogue within the market at that time. So in our case it was things like big data, software as a service, cloud, data analytics, which were areas where big companies often were looking to fill in gaps in their portfolio or increase their capabilities. For the buyer, their real interest, of course, is forward revenue. So any measure of past performance is really only a measure of potential future performance. So it's no good showing you've had a very good past year unless you can give security over that revenue in the future. Particularly with a software as a service model, often you have a renewal opportunity to renew software contracts. So you can present your revenue in a number of different forms. Clearly the most secure form of revenue is something which is committed, where you've got a contract and you know you have that income over the next year or 2 or 3 years. But actually next to that, you can also show that you've got renewal revenue, where you've got contracts and you've got a good success rate of renewing those contracts, which, while not being as good as guaranteed committed revenue, are more certain than completely new business. So you can classify your revenue in different groups, which gives a buyer greater confidence of that future revenue. And those groups will be committed revenue, renewal revenue, where you've got contracts which you can show you've got a good confidence in renewing, and then extensions to existing contracts, and again you can show a track record of extensions, and then lastly would be completely new business. And that gives a buyer more certainty and more security about that recurrent revenue and the future performance of the business. I found the process a challenge, but also very enjoyable. But I guess the most difficult, scary moments is as you're coming towards the end of the process and you put a massive investment into it, and you can see that the prize is almost within your grasp, and then you find there are legal and commercial issues that emerge at quite a late stage. And these often aren't issues that come out during due diligence. They're often issues that are within the sale and purchase agreement, where the buyer wants to put certain indemnities in place or certain clauses in place. And I think I found that they weren't issues that lawyers on either side could resolve, because the lawyers could only talk terms. And I found the best way to address those was to be able to talk to the buyers and potential buyers in business terms to understand what their real issues and concerns are, and therefore find a way of structuring the deal that would work for both parties. Whereas the lawyers could spend forever arguing about the terms but wouldn't get to the fundamental drivers that were behind those issues. And often they're not insurmountable. They may feel like they're insurmountable when you're quite tired, having gone through a long process, and suddenly these issues come out that sound difficult to deal with around liabilities or indemnities. But if you can truly understand, as in any sales process, if you can truly understand what the genuine buyers' needs are and their genuine issues and concerns, then often you can find a compromise that solves those, as we did. We found several issues that looked almost insurmountable, and the lawyers couldn't solve them, but by taking those away and looking at them as ordinary day-to-day business issues, we could find solutions. We quite significantly improved our offer from the first valuation, and I think one of the ways in which we achieved that was to make sure that we'd got, at the very final stage, we'd got 2 or more bidders still bidding. and convincing those bidders that they were in a competitive situation where they had to raise their offer if they wanted to secure the company. Because by then they'd already put quite an investment in terms of their time and quite an emotional investment on their part, and they don't at that stage want to lose the deal. So you're in a good position to improve their offer, particularly if you can convince them that they're in a competitive position, albeit a real competitive position, or with the help of your advisors. Sometimes you can create the feeling of competition even where it isn't really there. But the ideal situation, as with any sale or auction process, is you want to have multiple bidders at the final stage where you can, I wouldn't say trade them off, but you can persuade them they need to compete, they need to improve their offer to compete with others. Equally, is helping them see, when you get into closer dialogues with organisations, helping them see how you can enhance their business or how you can work with what they can bring to the party to improve your performance. So you can get into a closer dialogue about what the real opportunities are. So you've got to recognise they've got to internally justify the price they're paying. So you have to help them understand how they can achieve that. I think there are two things I'd say. I think the first one is to recognise that this is a selling process in the same way as you would sell to your customers, that you need to understand your buyers' needs and ambitions, what their drivers are, who the influences are, how you can present your offer, not just in financial terms, but presenting the assets you've got, the skills, the abilities, the customers you can bring, how you can present that in a way which meets their objectives, which often aren't just about earnings multiples, they're often about other things. It's very important to understand your buyer and recognise that all through the process you're selling. So you've got to present yourself, present your company in the best possible way, anticipate their needs and their issues and deal with those. And I think even before that, preparation is absolutely key. It's not just about the sales process, but it's also about the work you do in the years and months before that to make sure you're presenting your company and presenting the attributes of your company in the best possible light, anticipating what the market and what your potential buyers will be looking for, and making sure you are demonstrating and highlighting those aspects of your company, whether it's about your intellectual property or about the security and strength of your customer base, or about the security in your revenue and the level of recurrent revenue or the profile of your revenue, or it's about the sort of technologies or areas you're working in, whether it's the things like software as a service or cloud or things that are fashionable at that time. Understanding what your potential buyers will be looking for and how you can present your offer is key, but you've got to do those things in advance. You can't do that at last minute. So it's about ensuring your financial data is strong, that you've got a good analysis and understanding of your business to answer those questions, and that you can answer questions around barriers to entry and security of your revenue. You understand your markets and your competition, so when you're in front of potential buyers, you can answer those questions in a very confident way, backed up by good data and information from your company. And you can demonstrate the things that you're offering to your buyers are demonstrated also in the way in which you engage with your customers, and they're demonstrated in your products and your website. So there's an awful lot of preparation involved, so it's key. This isn't something you can do last minute. You've got to prepare these things at least a year ahead of the point at which you start the sale process. There's obvious information around your financial performance, but ordinary accounts and financial data are not really enough, because what buyers want to do is get some assurance about future performance. So therefore it's very good to have quite a lot of very good quality analysis about where your revenue is coming from, how secure that revenue is, where you see the growth in your products or services, where you see your customers going, and to demonstrate you've got a good understanding of that so you can answer those questions. You can demonstrate a lot of analysis and data and facts behind your projections to give them confidence in that, but then equally making sure you've done all the housekeeping so that things like your contracts are all up to date. You don't find that you've got gaps there. If you've got indemnities or liabilities in your contracts, that you're aware of those and you can bring those up front and you can explain why they aren't an issue, rather than waiting for the lawyers to find them and making it an issue, and ensuring that things such as your case studies and your references and your key customers and your website, all that sort of information is consistent and is correct, so that they can't find anything within that data which gives them any doubt about what you're saying, or any doubt or concern about the future of your organisation or your future performance. It's about both de-risking that process and removing areas where the buyer might perceive risk, and it's also about presenting yourself and your company and all the information about your company in the best possible light, understanding what buyers would be looking for and what would interest them. So it's not just about having correct data, but it's actually about presenting that data in a selling manner. Why can you, from this data, have confidence that you're going to see this growth in the future, or have confidence that your competitors aren't going to suddenly attack your market because you've got barriers to entry, or you've got secure revenue, you've got long-term contracts, or you've got evidence of really strong customer relationships. If you've got case studies and references and nice quotes from your customers, that gives buyers confidence that your position, your relationship with those customers is secure beyond just a contractual situation.